This is Pre-Market Prep. I'm Brianna Valesky here with Joel Elkanah, and we have Serge Berger on the line. He's a head trader and investment strategist at the Steady Trader. Serge has been an active trader since 1998. During his career, he's been a financial analyst, dealt in fixed income instruments at JP Morgan, and was a proprietary trader in equities, equity options, and futures. Serge, as always, thanks again for joining us on Monday mornings. How are you doing today?
I'm good. Good morning. How are you?
We are doing great. Just like everyone else, we can't stop talking about Greece. Uh, I mean, there's so much to talk about whether or not they're going to make this payment tomorrow. Capital controls going on in the country. People can't access their money in the banks. Greece has no money to pay back this debt. What's your take on the situation at this point?
Well, I like to, at this point, start it off with what I think people are forgetting a little bit here. Just to kind of pause is that it's actually there's a lot of human tragedy there. If you think about, what this is doing to local businesses, to families, families and children, it's horrendous, right? So I think just we need to keep that in perspective. As we talk about this somewhat cold-bloodedly in terms of financial terms, but. I do think that things have shifted a little bit over the weekend. I think it seems to me like the ECB and Europe in general is just trying to kind of get across the message that beggars can't be choosers, and it's a difficult dynamic in a socialist environment where that essentially has been the case for a few decades now at least. In terms of financial markets, I do, however, continue to think that this is more something that's going to cause, a few days of disturbances rather than something that's going to systematically break markets down. What I think it could do is it could bring sellers out of the closet as an excuse to start bringing more volatility into equities. So that's kind of where I am this morning. Raising cash into the weekend is what I did last week, and so I'm watching it from a fairly neutral standpoint from a trading perspective.
Just from your kind of macro point of view, what do you see as implications of if they're just not able to make a deal and Greece somehow tries to pull out of the union?
Well, I mean, I guess the problem there is, is essentially there's no such thing in any of the of the agreements that
Right,
a country can't really
exactly.
leave, right?
There's there's
You know,
no
but Yeah, but I would say that, I think a good solution to the extent that I can think of one here would be that they default but stay in, right? Um,
mhm.
Not something I've heard a lot of people talk about, but something that to me intuitively makes sense considering the fact that Merkel again this morning reiterated that they just can't let the euro go, and letting one country out is sort of a precursor to that. So that would kind of allow you know that argument not to stay, yeah, and them defaulting on the debt, and I don't know, kind of find some sort of medium term solution, I guess.
It just seems like we all we can do is sit tight and see what's going to come out of there at this point. So let's shift focus back to something a little closer to home and a little less just stressful. It seems like end of the quarter tomorrow. People are going to be rebalancing their portfolios. What are you looking at?
Yeah, so we're at T minus two, as I like to call it, and from that perspective, I think historically, and I did this statistic about a year and a half ago, so I don't exactly remember the exact numbers, but there's a lot of a good probability that you see better directional moves at the end of a quarter and into the start of a new quarter. It's obviously people are aware of this, but I think it's a good trend, and if I sort of look at where we are. Uh, as far as U.S. markets goes, a lot of things really are on edge. You can look at bonds, you can look at semiconductors after last Friday selling. Maybe one last hooray here into the new quarter or the end of the second quarter, and then maybe we're finally ready to go lower. So I think the dynamics of the end of the quarter and start of the third quarter could be interesting to watch, just purely from a price action perspective, and if that brings back some more bullishness, which I think is the one thing that's lacking here in the markets in order for us to see a better top.
You mentioned it'll be interesting to watch. I know some traders don't even do anything or trade very little toward the end of the quarter. What are you kind of looking at as your strategy over the next 2 days?
Yeah, I mean, my strategy is basically that. I'm not going to do much. I think it's a low
Yeah.
probability thing to do. But what I want to do is I want to watch what the price action is. So, if we get a big pop, today or tomorrow somehow, or Wednesday on the first of the new quarter, maybe that could get something going a little bit more directionally, or to the downside, whatever. The point is, we need to get something that gets us a little momentum in this market. That's been the problem for the U.S. stock market all year long.
Oh yeah.
We've had a range-bound market, 2130 in the upside, and the S&P is basically resistance, 2075 or something like that is support, and we just keep chopping it back and forth. And it's been much better to buy the dip and sell the rip as opposed to trying to play breakouts in any direction. So I need to see something, and I'm looking for catalysts all over the place. They're just hard to come by.
Right.
I think, or what the catalysts will be there. It's just there's no follow through buying or selling at any point. So
So you mentioned needing momentum and we're searching for a catalyst. What about our next upcoming earnings season? I think we're going to get the unofficial kickoff July 8th from Alcoa. Do you have any sort of sense of what you're expecting from the next earnings season, if that could be the catalyst for the momentum that this market needs?
yes, I think certainly in part. So like my base case is that we are going to see a better move in bonds again, and I think that will probably
Mm,
sort of move into equities. But on the earnings front, I think the rate of change in positive data in earn economic data over the past 9 months or so at least has been slowing. And I just don't think it's really showed up in earnings yet, but it's going to. And maybe this will be, more, well, I think in part that most likely will be something that will kind of get people to wake up and realize that, we're not exactly growing as fast as what the numbers were telling us. A lot of numbers are lagging, right?
yeah, yeah, absolutely. Something else that we were talking about on this show this morning is a lot of defensive dividend stocks that could come
Mm.
into play. Is that on your radar at all for this week?
I'm not a big guy in these dividend stocks because a
Okay.
lot of them, and I know there's some that move, but for the most part, they don't move a whole lot. So I feel like when you do get a move, it's fairly, it's fairly confined,
Mm-hmm.
to a couple days or something like that, which is again what I'm trying to get out of, or everyone's trying to get out of this. If you look at
Right.
the S&P, it's been trading in 60-point range over the past weeks, and that's tight. That's very
Mm-hmm.
tight.
Mm-hmm. So what is on your radar for some trading action, if not in the next, not for the end of the quarter, or maybe later in the week, the beginning of the quarter? Any individual names, any sectors, or
Mhm.
are you just kind of in a wait and see kind of mode?
No, I mean there's stuff on my radar. Like I think, for example, the price action in Intel on Friday on the back of Micron technology was actually pretty weak. So I think that could be something that, to me, looks to have better downside potential. That's one thing I'm looking at. Longer term stuff, and by longer term I mean like at least a few months. I like the financials. I really like the financials, but I would love to buy them after we get a better washout in stocks, and hope we get that. It just would make things a lot easier. Specifically, Aflac, I really like how that looks. It's been a laggard, and now it's got relative strength. It looks terrific on all the long and medium term charts and all that stuff. So I would be a big buyer of financials if we get a good dip. I'm going to say 10-ish%, which is what I've been trying to look for all year. Didn't expect it in the first quarter at all, but in the second quarter now would have thought we'd see a bit more traction on that, and we haven't really seen it yet.
Okay, let's just take a look here at a few stocks. I know that you've been talking about. I don't know if you've stepped up to the plate yet in Walmart here. Still been trickling down. Any thoughts here? I mean, now here's a stock that's already got beat up pretty bad. Is this something that maybe you'd be looking for a swing entry in on the long side?
Yeah, no, I closed Walmart for a real small gain. I guess at some point early last week, I think it was, because I know we talked about that. I still like it. I'm just waiting for the next bullish reversal. It's really that simple, and I just don't see it. But I think the analysis is unchanged. It's got a lot of long-term support. It's a stock like this, doesn't just drop in a straight line for this long and without getting a bounce. It's like historically not really doesn't really have any precedence. So certainly Walmart, I would look for that. And Alcoa, we talked about last week too. I think the same thing applies there. Alcoa just is due for a bounce, but of course earnings out in a week and a half or something like that. That might be the catalyst we have to wait for.
Maybe you can help me here. I'm just such a fader. Like this thing has just come off so hard. I mean, why am I looking to buy? Why do I have to be such a contrarian here and look to buy calls ahead of earnings? I mean, is just a permanent contrarian nature? Do you just kind of you see like this stock has really been beat up since last quarter? Any kind of surprise could get a nice rally in it. What would you say to a trader that came with you just like always trying like to be the contrarian, always trying to pick the bottom?
Yeah, in Alcoa, yeah.
Yeah.
Yeah, I mean it's more about mean reversion than anything else. And again, you probably don't necessarily need to buy this stock until you see a real bullish reversal. And in full disclosure, I have bought some stock in this, and it's not fun, but but it's not a massive position. And again, it's more of a mean reversion trade, which the way I trade those, I have to be more patient on. Those are not like 2-day trades. So the reason to be a contrarian is more from a technical perspective at this point. I mean, the divergences between momentum and price are just massive, and particularly, again, just purely price stuff here. The trading range since mid May has just been, enormously tight and steady, and that most of the time does not last. In fact, all of the time doesn't last. It's just a question of time.
All right, let's take a look here. I mean, we're just getting into the market open here. We had a big range overnight. I don't know if you were up at watching them trade, or at least off that 6 o'clock open. What are you looking for here? I mean, the first 10, 15 minutes of trading. What are you trying key on? Is it the futures? You try and just check all your positions. What are you keying on?
Yeah, I want to see the futures. I mean, I think the first couple hours on Monday morning are usually a little bit weird, because people are just trying to get, there's a lot of Monday morning meetings that happen, even while the market's still open, especially on the institutional side, once the market opens. So I don't want to focus on too much here just now. I just want to see, how we react here to the first bounce attempt, basically. I mean, the futures had a low, what was that overnight?
54 even.
2054, exactly. So, if we get a retest of that, maybe we have a better odds of going up. But the problem here is that this is being Europe led. Like if you go back to 2011, August and September, the market to watch for tells were not so much the U.S. futures, but it was more like a DAX or even bond spreads. So I would take my cue from that stuff. And so like I just I'm watching a lot of the European markets like Spain and Italy and the DAX particularly here. And you want to see how things like gold are acting too. I think gold is just at a point where it really could start to move. It just hasn't done it yet. So if we do get a move in gold, I think we might get a better risk-off move in equities as well at some point.
Rob Hood out of the chat. Want your thoughts on GMED? George, Mary, Edward, David. Not one I'm that familiar with.
Let's see. Globus Med. Yeah, I mean, you're looking at, I don't know the stock in full disclosure, but you're looking at a classic case of what has been 2015. Every dip's been bought, and every rally attempt more or less has been faded, at least since April. Very frustrating, very much looking to tighten up just from a purely technical perspective, but it hasn't done it, right? So do you want to try to trade a breakout another day? Go ahead. Maybe one day it'll stick. It's just the question is when. So I think a stock like that, you really have to keep the bigger picture in mind, which is that 2015 just been very choppy and continues to be choppy.
Okay, all right, and let's move on here. Got to talk about Apple here. Got talked up last week with Carl Icahn. Had the rally didn't hold, kind of come down with the market. You got any long-term thoughts here in Apple?
Well, Apple to me is a little bit in a better position than Netflix as far as Icon is concerned, because Icon still owns it. So I'm actually short Netflix. I shorted it the day of the news last week, and I just think there was a lot of folks still trying to ride the stock higher because of Icon. But in terms of Apple, I think, and I said this last week or whenever that 2 weeks ago when they had the product the conference. I said that if the stock can't start moving then it probably needs to wait until earnings. And I remain of the same opinion. I know it's down 80 basis points this morning, but that's with the broader market and with Greece. So to me, the stock is stuck in a range unless you're day trading it, and I think the earnings is the next catalyst. It's that simple.
Okay, so you have to wait for earnings on this one. Want to get your thoughts here on Alibaba, trying to get fill here after earnings came up, came back down. Any thoughts on Alibaba?
Yeah, Alibaba was very frustrating. I was long, and I'm actually still long a tiny, tiny bit of the stock, which I probably should have gotten out of looking at this morning. But there was a nice trade to be had after the gap up there in May, and then continuation buying. But it just shows that the stock isn't really ready to go higher yet, sort of through the medium term lens. It just isn't. So at this point, would I buy it? Not until I see a bullish reversal. I see your point. It might try to fill that gap from what is that? This May 6th, I think.
Yep, from
Yeah,
earnings.
yeah, exactly. And so that's kind of where I am. I don't think you need to buy this until you see a bullish reversal. Shorting it into the hole like this, I think there's better probability trades out there.
Okay, and let's just move on. You talked about the XLF here. You said you had some interest in some of the financials here. I see Wells Fargo and JP Morgan bouncing a little bit. Could you just give us your technical take on Wells Fargo and JP Morgan?
Yeah, certainly. So I think if you remember, I was long Bank of America. We talked about that, and then I sold it for a small gain a week and a half, 2 weeks ago, something like that. And I think the general take is the same thing in Wells Fargo and J.P. Morgan. I think the financials have been outperforming the market. I don't yet see dramatic underperformance. The problem has been that the rise since let's call it mid-April has been too steady. And I like steady, but this is like the contrarian tells me that we have a steady rise like that, you're eventually going to get a pullback. This, just like we talked about in Alcoa on the downside. So I like the financial still, but I would wait for this to give us a better, sort of bullish reversal candle or something like that. It just the rise was too slow and too and yeah, just a little bit to me too risky to chase it higher.
Okay, Bank America did have a selling balance here, big selling balance. I believe it got over a
Mhm.
million shares here. Opened up here, 1713, but dipped here a little bit off the open. So you took a little heat, got to 1723. Good resistance at that 1735. That was your double bottom from
Yep.
Thursday and Friday, and the close is 1741. We've been on the line with Serge Berger. He's head trader and investment strategist at the Steady Trader. Joins us every Monday at this time to give us his outlook on the market. Serge, great information. Thanks for joining us. We'll talk to you again next week.
Thanks, Serge.
Thanks, guys. Have a great week. Thank you.